All right, let's talk about something that drives every trader crazy: fake trends and those nasty market traps. We're going to cut right through all that noise by looking at a really smart tool designed to help you out: the VIDYA Indicator.
So let me ask you this, and be honest. Have you ever jumped into what looked like a perfect trend, only to have the market completely reverse and stop you out? Yeah? It's that sinking feeling, right? It's beyond frustrating, and trust me, it happens to all of us. And that right there, that's what we call the trader's trap. It's that awful spot where the market isn't really going up or down, it's just messy. It's chopping sideways. And in these ranging markets, all your standard tools and indicators suddenly start lying to you, pulling you into one bad trade after another. This really gets to the heart of the problem. You've got your standard indicators, which, they're fine when there's a clear trend. But the second things get choppy, they just go haywire. But then there's another class of tools: adaptive indicators. These are built differently. They're actually designed to read the market's volatility and adjust. So that brings us to the answer, doesn't it? We need a smarter tool. And that's where we get to introduce the hero of this whole explainer, the VIDYA Indicator. Now, here's where it gets really interesting. What makes this indicator so different? Well, it uses a special little something called delta volume. And its whole job is to tell you if the trend you're looking at is the real deal or if it's just smoke and mirrors. This is its secret weapon. So let's pull back the curtain on this secret ingredient, shall we? Because to really get a handle on how video works, you've got to understand what delta volume is all about. The easiest way to think about delta volume is like this. It's the fuel in the market's engine. A car can look like it's moving if it's just rolling downhill, right? But is there actually any power in the engine? Delta volume measures that: the real power, the conviction, the commitment of buyers and sellers behind a move.
And here's why that's a total game changer. If you see the price moving but the delta volume is low, that's a trend running on fumes. It's almost certainly a trap. But if you see the price moving and it's backed by high delta volume, aha, now we're talking. That's a trend with real power. That's a trend you can likely trust.
Okay, so that's the theory. But how do we actually use this? Well, it all boils down to two incredibly simple rules that can become your guide to sidestepping those frustrating traps. Rule number one: the number you need to burn into your memory is this: less than 10%. This is your big red flag. So, if that delta volume reading is below 10%, you should see it as a ranging market in disguise. It might look like a trend, it might feel like a trend, but there's no fuel in the tank. There's no conviction. And the best move you can possibly make here is no move at all. Just stay out, protect your capital. And now for our second number, which is pretty much the exact opposite. This is your green light, 20 to 30% or even higher. When you see delta volume climb up past that 20, 25, 30% mark, it is a completely different ballgame. This is the confirmation you've been waiting for. It's a sign that there's real power, real commitment behind that move. The trend is legit, and this is your signal to start looking for an entry. And look at this. It all comes together in this super clear, simple framework. Is the delta volume below 10%? That means it's a market trap in disguise. Your action? Stay out. Is it over 20 to 30%? That's your confirmation of a real trend. Your action? You can trade with confidence. It just doesn't get much clearer than that. So what's the big takeaway here? What this gives you is a new edge. It lets you move away from guesswork and emotion and start trading based on data with genuine confidence. I mean, think about what this actually does for you. You can finally stop getting faked out by all that confusing market noise. You can start telling the difference between a real opportunity and a dangerous trap. You get to trade based on simple rules, not your gut feeling. And all of that comes together to give you real confidence, even when the markets feel chaotic. And if I can leave you with just one final thought, it's this. Look, any old indicator can point out a trend. That's easy. The real goal, the professional's goal, is to know if that trend is real, and that changes everything. So I'll leave you with this question to chew on. Now that you know this, what's the first market trap you're going to see coming and just calmly step aside?